but everything is going to go down because a sharp decline in the market, especially when you've got so much margin debt, right, means a liquidity crisis. And a sharp decline in the market means people are going to be looking for liquidity. And you find liquidity in whatever you can sell. So Ajax expiration, my mythical junior, may not go down at all because people can't sell it. But physical gold will go down because it's instantly it can be sold instantly. So I think yeah, you'll see a sharp decline in pretty much everything. And when you look at your screen at 10 or 10:30 or 11 and you say, oh my gosh, look, the market's down. And then you look at whatever, Royal Gold and Agnico and Kinross, and you say, oh my gosh, I was going to sell, but I've missed it. You haven't missed it. Silver, just to make everybody feel happy. I mean, I just pulled up here silver, gold, and the GDX since the peak in October. You probably know this, but silver's actually held up better than even the gold stocks and gold.
Adrian Day says the recent drop in gold and silver wasn't a true correction, and the shallow pullback suggests the lows are likely behind us. Silver has even held up better than gold and gold stocks since October. Strong buying over the last 10 days shows huge sideline demand, while gold remains the ultimate safe haven.
Correction to see, how long the correction is going to last and how deep it's going to be. In this particular case, with gold in particular, but also with silver, we really didn't have a very deep correction at all. In fact, technically, it wasn't even a correction. And in many ways, it would make me more comfortable if we had had a bigger correction. Doesn't mean that's what I wanted, just, to wash out more of a weak holders. I think the bigger question right now, obviously I could be wrong, but I think the bigger question right now is not, how low gold and silver might go. I think there's a very strong chance we've seen the lows of this pullback. The bigger question to me is how long before they make, convincing new highs. And certainly the action, as you say, the action today, the action over the last, 10 days has been remarkably strong. And what that says is there's an awful lot of buying on the sidelines, people who didn't buy on the way up. And it's always this way, isn't it? You don't buy at 3,200 because you're waiting for it to pull back to 3,000. You don't buy at 3,300 because you're waiting for it to pull back to 32.
Right.
But if it drops to 4,000, suddenly it's a great buy. So, I mean, there's an awful lot of people who missed it on the way up, number one. And number two, I also think that some of the central banks and the big buyers were probably just giving it a pause, not waiting for a pullback to buy, just giving it a bit of a pause, because you obviously don't, just like you and I buying junior stocks, you don't want to be the one pushing it up on yourself.
Adrian notes central banks are steadily reducing US dollar reserves, with gold being the only large, trusted asset to shift into. Other currencies like euro, yen see only minor purchases. Even Tether has become a major gold buyer, while global demand remains broad, suggesting the lows are likely in. If you found this video helpful, hit like, subscribe for more expert insights, and share your predictions in the comments.
Continue to reduce their dollar holdings, and as they reduce their dollar holdings, where are they going to put them? I mean, I think only one central bank has bought silver. A couple of central banks have bought the Japanese yen or the Australian dollar, but in small amounts. The euro, when it came out, whatever that was, 25, 30 years ago, that was thought that might prove to be a competitor for the dollar. But in fact, central banks have been selling their euro recently. By recently, I mean the last couple of years, or at least a percentage of the reserves has declined, I should say.
Right.
gold is now higher than the euro. And so when you look around, yeah, they can put a little bit into this and a little bit into that, but really gold is the only asset that central banks are going to put large amounts of their reserves into. If it were a central bank, it would be one of the largest buyers. The only buyers that have pulled back, I think, are the Chinese non-official Chinese retail, which got into a bit of a mania in October. So they seem to have pulled back. But I mean, generally speaking, it looks to me very much as though we could well have seen the lows here, and it's just a matter of how long before we make new highs.
Tether's gold-backed stablecoin strategy makes sense as falling U.S. interest rates reduce Treasury-backed revenue. The team behind Tether focuses on hard assets like gold, royalties, and farmland, reinforcing long-term institutional interest. This strengthens the case for precious metals as stable investments.
They do have a gold-backed stable coin as well as the Treasury one, which is obviously their largest one. With interest rates coming down in the US, that means that the income, the revenue that they're going to get off their US Treasury stablecoin is going to decline meaningfully. When I say all they're getting, all's in quotes, all they're getting off the US stablecoin is the interest, but isn't paid to the people who buy the stablecoin. That's a pretty hefty fee. Interest rates move down, obviously that becomes less. So I think they probably want to, build their gold-backed stable coin. But I mean, look, let's not forget the people behind the people I know, and I don't know them all, but the people I know who are behind Tether are very, hard asset oriented people. So they like gold, they like gold royalties, but they've been buying farmland, for example. Which doesn't seem to get so much attention. So, I mean, I don't think it's out of character for them to want to build a position in gold.
Subscribe to the channel for more expert gold and silver insights. And don't forget to share your thoughts in the comments. We'd love to hear your predictions.